maybe it's very costly for you to buy dollars. So it is one of the way to reduce your transaction cost so that you can raise your $1 billion at minimum cost. Otherwise, maybe if you go to the open market, what happens? Dollar prices start rising. So we'll talk about in currency exchange over there.
Okay.
Lota. Maryland.
Yes, sir.
Understand?
Yes.
Min, Nam, Ping Ping.
Yes. Yes, sir.
Good, well done. Okay, so let's take a 10 minutes break and let's have a coffee and then we start from here. Okay, class, welcome back after the break. We were discussing the impact of credit crisis on trade. Let's move further. Now Now the factors that affect the international trade flows. Number 4 is government policies. We will also talk about this in detail. We're just going to be go through with this, that if the government wants to increase exports, because more exports result in higher level of production and income, so maybe what they want to do, or I put in other perspective, if government wants to increase the current account balance, right? Current account major portion is trade of balance, which is exports minus imports. Of course, current account going to be increased through more exports. If government wants to increase the current account balance, or in other sense increase the exports, what it needs to do? It needs to, first of all, make policies that increase the exports. And how we can do that? Number 1, restriction on imports. Right? If you have a country, if, for example, if right now we have a trade war between China and America, what happened? The America put trade tariffs on Chinese products. China put trade tariffs on American products. Right? So this is how they are playing with the trade war. So if government wants to increase the exports, it also need to relax the restriction on imports as well. Number 2, you need to provide subsidies. Maybe government reduce the taxes, or maybe government declare a zone. For example, in China, we have 7 zone or 5 zone operating currently at Shanghai, free economic zone. Over there, you can register your company. You will be given 5 years tax rebate, and government is not going to charge you for 5 years. And in 5 years, you can develop your company, right? Lack of restriction on piracy. If you are going towards piracy, then what happens? You will lose money. People are not allowed to copy the Piracy Act, this kind of stuff. So we have a very famous case in your book, that is that US always says that due to this copyrights of Windows and all the stuff, the US is losing $2 billion annually because of piracy. Because also China is notorious regarding the copy, and providing copy structures. And in many of the famous, brands, they always complain that before even they launch the product, even Chinese market, they already launch the double copy of that one at a very reduced price. Environmental restriction. If restrictions are higher, then exports are lesser. Why? Because restrictions are going to increase the cost. You need to provide green, solution. Don't emit so much pollution. Protect the right of the surroundings. These all cost a lot. When this cost a lot, it will increase your production cost. Labor laws, tax breaks, government securities. Labor laws, if you have minimum wages, then of course your production cost is going to rise. Your production going to cost rise, your price of the product going to rise, your price of the product going to rise, then it is costlier for your product in the eyes of foreigners. So they don't want to import from you. Tax breaks, if you give tax breaks, your export rises. Country security laws. US makes or buy military planes. If the country says that you cannot export this kind of product, then in that industry, it cannot grow. Similarly, for example, military planes you cannot export, right? Similarly, for example, right now this F-35, the F-22, F-16 is already with many countries of the world, but F-35 is the latest development, and its price is more than $2 billion, and it's very enormous. A very you can say that very practical when it comes to the war. So the government place restriction not to export to the countries unless you have better version of F-35. So this is just one of the examples. Exchange rates, how it can affect the international trade flows. Current account decreases if currency appreciate relative to other currencies. It means if your company if your country's currency, if Chinese yuan appreciate, then what happened? Its current account balance decreases. And why is that? Even though the price is 10 yuan of a product, but when it is previously it is converted to US dollar like 1.6, but now again the price for a local producer is still 10 yuan, but since yuan appreciate, and what happened? It takes more dollar, $1.8, to buy 10 yuan product. So in the eyes of US, your product is still costly, right? So your deficits start increasing, or you are going towards deficit. Understand, guys? If you don't understand right now, we will be having a lot of discussion on exchange rate, because this international finance is a lot of about exchange rate, currency management. So government policies, like I told you, we will be talking in detail regarding the government policies, how it is impacting the international trade flows. Number one, the restriction on imports. So taxes on imports, we call this tariffs. So don't just get confused by the word tariff. Oh, it looks very scary. No, it is basically the taxes on imports. It increases the price, right? When it increases the price, then for local customer, the imported goods looks very costly. So they don't want to produce, they don't want to buy the imported stuff, right? Plus quotas limit volume of the imports. So if you know raise the restriction on the imports temporarily, you increase your exports with other countries, not with that country, because that country is also very wise. If you are going to disturb their exports, they are going to disturb your exports as well. So they are also going to be implementing a lot of tariffs on you. But if you restrict the imports, you will reduce your imports from that country. From other countries you can still export or import. Subsidies for the exporters, of course. If you give subsidies, then your cost is going to be lower and you will be more globally competitive. Restriction on piracy. Government can affect international trade flows by lack of its restriction on piracy. You can allow the local companies to copy some of the technologies or designs from other countries' product. Fourth one is environmental restrictions. The restriction impose higher cost on local firms, placing them at a global disadvantage compared to the other firms in other countries where they don't have this kind of restrictions. So in that case, you are no more globally competitive. Your costs start rising. When your cost starts rising, your price starts rising. When your price starts rising, the importers see your price a little bit high, so they don't want to purchase from you. So your exports decreases. Labor laws. So where there is more strict labor laws, their cost is always high. Look at the labor cost in the United States as compared to China. 6, business laws. So firms in countries with more restrictive bribery laws may not be able to compete globally in some situations. Like in US, you can claim the bribery to the other countries' officials. You can claim that one from US government as a tax rebate. Right? Sometimes you need to win the bids, even though your company is very competitive, your product cost very, your product cost is smaller than what they expect. But even then, if some other countries member bribe the officials, the politicians, so they make your products looks very scary and very unhealthy or unattractive, right? So in that case, you need to provide some kind of bribery. If there is more restrictive laws over there, then globally it is you are at disadvantage as well. So tax break, though not necessarily a subsidy, but still a form of government financial support to expand your exports. I'm not going to give more time on that. Tax break means simply you say that, okay, for 5 years we are not going to charge you any tax. So you can claim all the profit, you can expand better, it's like that. Government security laws, government may impose restrictions when it comes to national security concern. You cannot export transistors because transistors are going to be used in bombs, in missiles, guided missiles. So it's better not to, have a transaction on transistors, resistors, this kind of stuff. Or you cannot export the transformers because the government cannot, fulfill the local need for electricity. Transformers are needed, and you are exporting that. The government can make restrictions and can make it as a national security. Or if there is a drought or there is national, natural disaster, and you are exporting of wheat and rice, exporter of wheat and rice, the government can make, security laws, make it as a national security. I can say that you cannot no longer export rice or wheat to other countries. Why? Because locally demand is not going to be fulfilled. Okay, now impact of exchange rates. Well, like I told you that if a country's currency appreciate, its product looks more costly. Let's talk about this. So read it very carefully. If a country's currency begins to rise in the value against other currencies, its current account balance should decrease. Other things equal. We'll talk about this, other things equal. As the currency strengthens, the goods exported by the country will become more expensive to the importing countries. As a consequence, the demand for such a good will decrease. So guys, do you understand that, or should I explain it? Florian, Marilyn, Min, Nam, Nimesh, Not, Ping Ping, Kathleen, Crystal, Fabian, Jordan.
Yes, sir. We got it.
Yes, sir.
Okay, so why they have written this other things equal? For example, if you don't have any other options, right, whatsoever is the price. For example, you want to buy roll rice, bulletproof roll rice for your president. Even though
I will take a substitute. If the price is too expensive, I will take a substitute.
yeah, you will take its substitute. But if we don't have the substitute, you have to buy from, if dollar is increased, so the